Welcome to your Skytech-Lens. Mercedes-Benz, the iconic German automaker, is facing a sharp decline in U.S. sales. In the first half of 2025, their American sales dropped by 12%, and across North America, sales fell 14% in the second quarter. The culprit? A new U.S. tariff on European cars, making it much more expensive for Mercedes to import vehicles. As a result, Mercedes is sending fewer cars to the U.S., leaving showrooms emptier and dealers struggling. The company predicts orders could shrink by another 15% by year's end, about 10,000 fewer cars for the American market. This isn't just about luxury sedans, even their electric vehicles are seeing global sales fall by 18%. Dealers are left with less inventory, making it harder to meet customer demand and keep their businesses afloat. The ripple effect stretches from German factories to American sales floors, impacting workers, dealers, and buyers alike. For many Americans, the dream of owning a new Mercedes is slipping further out of reach. The situation is worsening with no quick fix in sight. The U.S. market, once a Mercedes stronghold, is now a daily struggle for survival. To understand Mercedes's troubles, you need to know what a tariff is, a tax on imported goods. The U.S. government recently imposed a 30% tariff on European luxury cars, making each Mercedes far pricier to import. This move is part of a broader trade dispute with the European Union, which has retaliated with its own tariffs on American products. Tariffs are meant to protect domestic industries, but they often backfire. For Mercedes, the tariff means either absorbing the cost or passing it to customers. Neither is good for business. Dealers face higher prices and fewer cars, while American buyers see sticker shock. The intended boost for U.S. industry is instead hurting businesses and consumers on both sides. A single government decision has triggered a chain reaction, hitting wallets everywhere. The new tariffs have forced Mercedes-Benz to slash shipments to the U.S. in just 6 months. 8,200 fewer cars arrived compared to last year, a major blow to one of their top markets. At German ports, cars once bound for America are now rerouted to places like Saudi Arabia, South Korea, and Australia. This shift disrupts the entire supply chain. Fewer ships are loaded, port workers have less to do, and logistics networks are strained. Even the massive cranes at Hamburg and Bremen are moving less cargo. The U.S. market's loss is only partially offset by sales elsewhere, often at lower profits. Mercedes' carefully tuned shipping system is now bottlenecked, with thousands of cars stuck in limbo. The impact ripples from European factories to American showrooms. The tariffs have created a global logjam, with consequences far beyond car sales. Mercedes-Benz dealers across the U.S. are facing a crisis. Their business depends on a steady flow of new cars, but shipments have dried up and prices have soared. Showrooms that once gleamed with new models now have empty spaces and anxious staff. Dealers must now sell existing inventory before receiving new cars, adding pressure to move expensive stock. Many are struggling to cover costs, with some forced to lay off employees. The tariffs are hurting not just Mercedes, but American small business owners and their workers. Tensions are rising between dealers and the company, as both sides grapple with a shrinking market. The partnership that once fueled success is now strained by forces beyond their control. For many, the dream of running a thriving dealership is fading. Empty showrooms are a stark reminder of how global trade disputes hit local communities. The fallout is visible on every sales floor. The trade war's impact isn't limited to imports. Mercedes' Alabama factory is feeling the pain too. The Tuscaloosa plant, a major regional employer, has cut production due to retaliatory EU tariffs and falling sales. Recently, 3 evening shifts were canceled, sending 900 workers home without pay. These are real American jobs lost because of international trade tensions. Workers face uncertainty, hoping for shifts to return, but there are no guarantees. The irony is clear. Tariffs meant to protect U.S. jobs are costing them instead. The Alabama plant, once a symbol of global cooperation, now stands as a warning of unintended consequences. The local economy suffers as the assembly lines go quiet. In today's interconnected world, trade barriers rarely hurt just one side. The fallout lands hardest on workers and families. For American buyers, the tariffs mean luxury cars are suddenly much more expensive. A typical Mercedes now costs $5,000 or more extra. Top models are up by $30,000 to $40,000. Combined with high inflation and interest rates, the total cost of ownership is out of reach for many. Tariffs also raise the price of spare parts and repairs, pushing insurance premiums up by 10%. These rising costs make buyers hesitant, leading to falling sales. Many are delaying purchases or looking for better value elsewhere. The tariffs hit not just the company, but every American dreaming of a new luxury car. The financial burden is real and growing. The financial toll on Mercedes-Benz is mounting. US and North American sales are down sharply, slashing revenue from a once profitable market. Currency fluctuations add to the pain, with a weaker dollar cutting into euro profits, costing the company 15 million euros in just 6 months. Mercedes' big bet on electric vehicles is also under threat. Tariffs make their EQ series far pricier than rivals like Tesla, which faces no import tax. Competition from Tesla, Korean, and Chinese brands is fierce, squeezing margins even further. The company faces a perfect storm: lower sales, higher costs, tough competition, and unfavorable exchange rates. Profits are eroding, threatening future investment in new models and technology. The tariffs aren't just a short-term headache, they're causing lasting financial damage. Mercedes must now rethink its US strategy to survive. The brand's global leadership is at risk. The stakes have never been higher. Mercedes isn't alone. BMW and Porsche are also hit by the 30% tariff, with US sales down 2% and 7% respectively. Rising prices are eroding brand loyalty, as buyers shop around for better deals. Even corporate fleet buyers are mixing brands to cut costs. This opens the door for American companies like Tesla, which aren't subject to tariffs and can offer more competitive prices. As European cars become less affordable, Tesla and other domestic brands are gaining market share. The trade dispute is reshaping the US luxury car market, creating winners and losers. European brands are at a disadvantage while American manufacturers benefit. The effects could last long after the tariffs are gone. Brand preferences and market dominance are shifting. The competitive landscape may never be the same. The tariffs have thrown the logistics network into chaos. At US ports like Los Angeles and Long Beach, containers now sit for weeks instead of days, racking up costly demurrage fees. Warehouses are overflowing and companies pay more for storage as goods are delayed. These extra costs are passed on to consumers, driving prices even higher. Port workers, truck drivers, and warehouse staff have less work as the flow of goods slows. The entire system built for high volume is now bottlenecked and inefficient. The hidden costs of the trade war ripple through the economy. The disruption is felt far beyond the docks. The 30% tariff on European luxury cars has triggered a cascade of negative effects. Mercedes-Benz faces falling sales, lower profits, and global disruption. American dealers struggle with empty showrooms and higher costs. US workers lose shifts and income despite the policy's intent to protect jobs. Car buyers face higher prices and fewer choices. The lesson is clear. Trade barriers in a global economy often hurt everyone. The policy has created a lose-lose situation, trapping businesses, workers, and consumers alike. In the end, building walls in trade leaves everyone on the inside worse off. Thanks for watching the videos. And subscribe the channel Skytech-Lens for more updates.